even dealing with the brokers, at one point I was talking to him, presented a deal to him, and then all of a sudden they came out with changes, and then he's like, nope.
You're listening to the DORE Podcast, where we spotlight the people, ideas, and businesses keeping Ottawa running. From contractors to real estate investors, entrepreneurs to industry experts, we dive into real conversations and help grow everybody's pie.
Episode 33, Litehouse Investments.
So Trevor Morrissey, nice to see you today. Thank you for coming on to the DORE Podcast.
Thanks for having me. This is a great setup you have here.
Yeah, well, thank you. That's all Mike. I like to do that. No, so Trevor, it was interesting when we connected and you offered to come on to the podcast. I was like, that's great. I'd love to have a chat, and I know you have some interest in real estate. And we met, I believe, last year the first time at a Rio. I think I was doing a speech, and you came to see me after because there was a listing, and you said I was too expensive.
Yeah, so exactly. You were doing a talk at Oreo, and one of the pictures that you had in your slides, I was like,
was one of the listings.
I recognized those two buildings.
Yeah.
So I got to go talk to Dan. And at the time, I didn't I knew about your property management company, but I didn't actually know you were also a commercial agent.
Yeah.
And I was like, those pictures you had, what's the story on those? Because I think at the time they were listed for a year or better.
Yeah. They had it for sale for a while, and it had been conditionally sold, but because of the lending environments and so on, the people who were buying it, I guess they assumed that they could just leverage off their other stuff to buy it, and they could never extract the funds. But their period to do their due diligence was significantly long, so it went on the market, conditionally sold, and then all of a sudden it came back on the market. Mm-hmm. And it was interesting, because it was listed with another realtor that I know very well, and anyway, so we chatted. So I was brought down to the listing to help out. And explaining to the sellers at the time that if they wanted to extract value from this sale, they would have to facilitate, for the most part, I may be wrong, but they would have to facilitate, a buyer taking advantage of a CMHC type financing, insured financing, in order to go and be able to get the value that they thought it was worth, and that there's a lengthy process to do that.
Yeah.
So it's so that when I did the talk, that was one of the listings that we had at the time, and so because the CMHC financing, if anybody's aware, have you ever done the CMHC process or?
I haven't gone through the CMHC myself.
Yeah.
But I've been on numerous of webinars and have chatted, worked with mortgage brokers on other deals that we had looked at, putting CMHC together, but the deal itself didn't make sense and pencil out in the end.
Yeah.
The hard part with CMHC is, as anybody that's in real estate will know, is it's a moving target, right? So even dealing with the brokers, at one point I was talking to him, presented a deal to him, and then all of a sudden they came out with changes, and then he's like, nope, it's going to add this expense to this project, so you better run that through your numbers. So
they just did that again in July.
Yeah.
Oh well, we'll deviate from that.
Yeah.
But you're a paramedic.
That's correct.
Are you still a paramedic? Yeah.
I am still a paramedic, and I guess whether or not I work in the industry or not, I always will be a paramedic. But I'm in my 28th year now.
Nice.
So
you started when you were 10.
Yes.
Yeah. Okay.
10. Yeah.
And you're involved in real estate as well. You own a few properties, and tell us a bit about that journey getting involved into real estate.
Yeah, so I started working in Halifax, Nova Scotia as a paramedic, and rented for many years. I was young, like you said, 10. And I wanted to eventually own my own place, but didn't have the funds for down payments and, owning a single detached property. So my mom, way back in the day, I guess she kind of subconsciously set the root in me to have income from your home, because we used to take in, at that time they called them boarders. So it was students that were going to trades college, lived in our basement, and my mother fed them their supper meal. And so when I was looking for a place, I was like, okay, I can't afford my own, but I probably can't afford something that has some type of rental income. So which meant I got into a side-by-side duplex, which was, great for me. I mean, and I was single at the time, so I had a 3-bedroom on my side. I rented out the other 3-bedroom on the other side. And at times I was taking 2 roommates in with me. So I more than paid for my expenses, mortgage, property taxes, and gave me a little extra, party money.
Yeah. It's funny, when I did a similar thing when I bought my first house with an apartment in the basement. And I remember my dad, which we coincidentally just walked in when we were talking about him before. My dad's entire career worked at CMHC. Oh. Okay, so it's interesting, to learn from that angle, and it was because so when I bought my first house, I'd been involved in Amway at the time, being my 17, 18 years old, and I'd been exposed to a book at the time called Rich Dad Poor Dad, which everybody knows. And when you read about the history of how that book came to play, it came in through Amway's channel. So it's interesting how multi-level marketing type business, which always speaks, they have, which I enjoyed that. I didn't do it very long, but I thoroughly enjoyed, learning from the people doing that. And one of the books, I never read, but that book, I bought that book because it had a real estate angle. I always thought it was interesting because both my grandparents own rental properties, and my parents had a triplex at one point. They didn't really like it, but so there was an appetite for me to learn from that. And I remember reading that book and saying, you learn, what, and to me, I loved accounting at the time. I was taking an accounting course that was really gravitating, and his definition of what an asset and a liability is. Yeah. And his definition, as opposed to the real definition, but his definition is essentially an asset on a balance sheet is something that actually puts money in your pocket, and the liability is something that takes it out. Yeah. So when you look at it from a context of a house, then most people say it's an asset. For the bank, it's an asset, but for the person who lives in it, it's actually a liability. Mm-hmm. And I did a talk a few years ago about that, but it was essentially at that time I was like, whoa, hang on a second, right? And then so I had a Ford Mustang GT at the time, and I sold and I bought a plow truck because I'm like, okay, well, my Mustang is not an asset, it's a liability. Yeah. But in my pickup truck with a snowplow on it, all of a sudden I can travel and I'm making money with it, so it became a real asset. So when I went to buy my first house, I wanted a rental apartment in the basement, or I wanted some type of rental income. And I remember telling my dad, saying, when I buy my first house, I want it to be the same thing as living at home. And he's like, what is that? And I said, it costs me nothing. That's what I want. Yeah. And that's what I did. And it was interesting because probably about a year into it, I remember him saying, he's looking at your house, like, if I look at the house, he says, I look at your income, I look at, the income you get from the house, I look at your income you get from your plowing. He says, your plowing and your house, they pay for all of your all of your expenses, and your salary at the time is free and clear. I said, yeah, just like living at home. Yeah. So I can appreciate that, and how you turn that into a positive, right? Yeah. So and then afterwards, did you what happened with that after?
Yeah, so obviously that property then allowed me to, leverage because it went up in value. The mortgage was paid down, and subsequently I bought a couple of other duplexes. This was back in Nova Scotia and Dartmouth, and that kind of had set the tone for me, seeing what real estate can actually do. Obviously, we don't bank everything on appreciation, and mine appreciated slowly, but enough that, pull out $60,000 in a couple of years and buy another property, using none of my own money, but just simple appreciation and the mortgage being paid down. So it was very powerful for me. And then I kind of took a little bit of a hiatus, met my now wife, and she was training in Nova Scotia and had to do some more training in Toronto. So I ended up commuting a lot there for a couple of years, not knowing where we were going to end up. So we ended up here in Ottawa. And it's been a fun journey. The last, I would say, 4 years for sure. I've kind of, aside from buying properties using, my own funds, I've done a lot of training to put myself in position to acquire bigger buildings. And, the bigger buildings require, as being on the commercial side, being able to analyze the numbers. And it's actually, a lot of it is not actually the numbers, because most people are pretty good, with numbers. You can see what your expenses and what your income is, and as long as you're making some money at the end of the day, it's good. But it's actually the strategy of how you're going to actually manage that building going forward, right? And being able to see a building today and what it actually might be worth 5 years from now or 10 years from now is really, where all the pieces of the puzzle coming together.
Yeah, internal rates of return, yeah.
Because, something can look really good on paper today, as of today, but it might not 5 years from now, But if you can get into something that, whether it's doing some renovations to increase, the units, or, the outside appeal, that, come 5 years.
Yeah, value add projects.
Yeah, if you're able to increase the income and the rent, and, hopefully if you're doing some renovations, you're hopefully able to decrease some of your expenses. You can bring the value of those commercial buildings up quite significantly.
So, have you done any of those yet? Or
I haven't done anything.
Sure. Yeah.
As you would call a value add or a BRRRR strategy. For me, and the time constraints that I have, I've got a young family, and my wife works a heavy, demanding job. So I don't want to put myself into a position of managing a big project. But if I'm looking at a building that says, potentially is operating well, but has maybe dated units, looking at, at tenant turnover, there could be some updating done, whether it's, replacing kitchen cabinets or, different things in the bathroom, vanities, and, maybe doing new flooring throughout, those types of things, as ownership goes on, would kind of be more in my wheelhouse. So
interesting. Yeah, because I think I think there's a misconception, and you actually hit that there, which I think is important, is that on turnover, because a lot of times people will purchase, and then they think that they can just do whatever they want. And I don't know, I'm not familiar with every province's regulation when it comes to rental or Residential Tenancies Act, but in the province of Ontario, even though there's a change of ownership, you don't get to dictate the new leases. The leases come attached with the units, and they are, unless you're, post 2018, which is usually they're not value adds, then technically you're rent controlled. Yeah. And it's capped at 2.5% in Ontario as we speak. So it's limited what can be done unless there is a tenant turnover. And in my experience, I own projects like that. And usually, and I don't blame the tenants, but the people who you would benefit the most from a value add from their units, they never want to leave. And if I was in their shoes, I wouldn't leave either.
Yeah.
Right. And I've tried multiple strategies. We had, at a certain point, we offered cash, for tenants in exchange for breaking their lease. All transparent that they don't have to take the offer. If they have no other place to go, they shouldn't take it. And but if they're on the cusp of leaving, then if this helps, then great, because we could do exactly what you're talking about, right?
Yeah.
A fit up, and then next you recalibrate to today's market, and it changes the game. But it's not. It sounds good, but it's not as simple unless you have turnover. So I'm glad that you pointed that out, because I think a lot of people don't realize, especially people who have never done that, they don't realize that it's on turnover. So if the tenant doesn't willfully leave, that may or may not happen, or may happen in 5 years or 10 years, or may not happen before you.
Yeah.
At DORE, we're more than just leasing agents, we're rental matchmakers. Our team is dedicated to matching the right tenants with the perfect home. With personalized service and a deep understanding of the rental market, we're here to help you find a place that you'll love. Inquire today and rent from people who care.
I mean, the other option that I've been taught as well is if you can have a vacant unit, renovate that one, and then present it to the other tenants within the building. And I've heard there's been some investors that I know have had some good success with that, saying, like, especially if you're talking about like those ones where, like, these units could really use some renovations, but because the rents are so low, they don't want to move. But there is potential that you could have someone that would go into that new unit and be like, oh, wow, this is really nice.
Yep.
And get them to, hopefully sign on at the new rental rate into a nice new unit. And then now you're left with their unit that can be renovated, and hopefully try to get people to cycle through your new units. But as you say, it's not always it's not always possible, right? I mean, people they live within their means of what they can afford,
and who can blame them?
Yeah, absolutely. And that's the way it is. And that's as a housing provider, we need to realize that every unit is not going to be at market rent. It's almost near impossible to get that number of people, because there's lots of people that need places to live. So.
No, and not just that. I mean, and even as you're talking, in a lot of cases where we tried that strategy in one of the buildings that we do, where we'd renovate a unit and offer it to the tenants inside, and they all go in and say, wow, can I rent at the same price I'm paying mine? Yeah. No, then obviously. So, but I mean, listen, and I put myself in their shoes. Well, I wouldn't move either. So it's not, I don't blame them for doing that. But it's, I just want to make a point about what you're talking and making sure, like you pointed out, and people listening in, that it's on tenant turnover. So those things are not, can't arbitrarily do that unless there's a willing participant in the tenant, either, mutual termination or whichever. So, so that's an important point. And you're a bit involved in OREO. Or like OREO being the Ottawa Real Estate Investors Organization. So, so I've been in Ottawa for 10 years, and it's only been, I think, the last 2 years that I joined OREO, which is our local investment organization. And I think it's $127 for the year to join, and they meet monthly. And just to put it out there, I have no affiliation. No, but I put it in just to
plug. Yeah.
No, but just because I think anybody who has any interest in learning, that's
Absolutely.
A great place to go. It's inexpensive. I have nothing to do either.
Yeah.
But it's just, I want to bring it on because it has an element of real estate that I think we want to bring to this conversation to anybody who's listening. So this is not a plug. It's really just
Yeah, absolutely. I mean, it's I've spent a lot of money in the last 4 years educating myself in real estate, and the $127 is like by far the best return on investment. Just the meeting the people. Every month that I go to the meetings, I meet someone new there, and we just had summer event where we didn't actually have a speaker, but it was just more strictly kind of networking, and it was at Overflow Brewery, and they had a barbecue set up there, and we bought tickets, and I met several people that was Wednesday, on Wednesday, and I've already had connections and conversations with, so it's networking in itself is very powerful. So
no, it's great. I think it's I think it's a great platform to have. And I was just looking at, like, on your LinkedIn profile, so real estate investor, obviously. So you're focusing on acquisitions now. You're just looking for strategic type environments, whether it's partnership, that type of stuff. So that's still on the radar for you.
Yeah, absolutely. Yeah. So I still do have, if you want to call it, a 9-to-5 job, but it's not 9 to 5. It's shift work.
Of course, but a stable job. Yeah.
Yeah. So I still have my hands in the role of a paramedic. But real estate over the last 4 years has really kind of taken a hold. And my goal now is to acquire a building within the 12 to 30 unit size. And then the role that I would take on would be the active investor, managing the asset, acquiring the asset, all the due diligence, as you know, that goes along with acquiring these buildings, studying the area that it's in, the market, how things are looking that way. And then, with that size of a building requires capital to purchase. So, and here comes the networking, right? Getting my name out there so people know what I'm doing, and, bringing in potential partners that are looking for similar type returns as myself in certain buildings. Some people have a high risk tolerance and they like these flips and the burrs, and me myself, I like to be more conservative. I've seen so many of these types of projects go the other way of giving good returns. So it requires a lot of management of those projects, which, as I was saying earlier, I don't have that time to be able to put into the heavy management side of doing these flips and things. So getting into more stabilized buildings with looking at the building with the abilities to improve it over years, not just a year.
And there's some out there for sure.
It's we've been in funny markets, like they've been changing.
Tell me about it.
Almost monthly, like with interest rates and changes in CMHC, and
very interesting.
So.
I just prefer to say interesting.
Yeah.
It's an interesting market. Yeah. Take it the way you want. You also mentioned in your bio private lending. So what is that angle for you?
Yeah, so I've loaned some of my own funds, registered funds, to different projects. I have some registered
in real estate.
In real estate, okay. So I have some registered funds that are being used by a developer out in Alberta, and it has its challenges as well. But you just kind of have to hold back in your seat, and the timelines haven't been met. But going forward, like, it's still a strong project. It's just with the interest rate changes and the dynamics of investors that would be interested in these types of properties, has kind of dropped off. The number of lending institutions that are interested in lending on these bigger projects, have kind of clawed back a bit.
How big is that project?
So it's a land development project. So the land is purchased. They've got it partially serviced, but of course then the town, they've all they're constantly changing things. So they ended up having to put in a whole new intersection with lights and stuff like that. So you'd think it would be easy, but it's actually all the studies that go into like traffic studies and like rainwater, management studies, and where like for the ditches, and so that puts the timelines, back further and further before they can actually get buildings built.
And that developer that you're invested in, have they built similar stuff in the past? In Alberta, or?
Yeah, they have. Yeah.
Okay.
Yeah.
And is this going to be a rental or something else?
So there is opportunity for multifamily buildings to be built, and as well as lots.
Okay.
For just residential lots.
To sell
off the lots. But before they're able to sell these lots, all this service work. So, so that's kind of where some of the delays come in. And
are you going to be participating in the land lift, or just strictly a return on your?
Just return on.
Just no land lift.
Yeah.
Okay.
No.
Okay.
Yeah. Interesting. Just an annual interest rate.
Interesting.
Yeah.
Interesting. And that's how long? Like, what's that expected length of time?
Yeah, so we were supposed to be, I think we're about a year over timeline.
Sure.
Right now, and hopefully all the investors can kind of stay together, and because obviously that adds its challenges too, right? Because people get into investment and they're told it's a 2 or 3 year project, and now it's a 3 or 4 year project. Some people want their money back, and without being able to move forward and sell the lots, or have someone build, it becomes difficult. So
it's challenging. There's no doubt.
Yeah.
No doubt. I was going through your posts also. I saw that you had a call with Eric Deschamps. I'm not sure who Eric Deschamps is, or Level Up Your Business Deep. So what does Eric do? What was that all about?
Yeah.
You posted on Slide.
Yeah.
So for me, I'm like, I find that interesting because it's real estate related. So let's,
So he's,
if you want to talk about it.
I mean, to be completely transparent, I don't know too much about him.
Okay.
I've been following him on social media.
Yeah.
And he's a business coach here in Ottawa.
Oh, okay.
And so I had reached out to him to basically see how his business side of the coaching, because obviously running multifamily buildings, you had to treat it like a business, and not little mom and pop shop. So I've just been trying to figure out is there someone else out there that could help me build a business and present it more structured, especially when I'm looking at networking with investors and things like that, because obviously we all want to present ourselves as professional as we can, and
absolutely,
and so I reached out with him, and that's a fairly new post.
Yeah, it looks like 5 days. So I'm like, I find that's interesting. I mean,
it's in the works.
Yeah, that's awesome. That's awesome. No, that's great. Yeah. And it's always good to get different perspectives, and then you make your own decisions. But it's good to have different ideas to draw from. So.
Yeah, for sure. Yeah.
And I mentioned you, and I also saw you put a post on Mike Rusty Woods on the Tour de France.
Oh.
I'm a cyclist. I love that stuff. So it's a sidebar completely from this, but that's interesting. We would chat about it after the meeting, but I thought it was interesting that the post about that. So.
Yeah, I mean, just quickly, I actually ride with Mike's dad.
Okay.
Here in Ottawa. So.
Oh, do you really? Yeah.
Yeah.
Okay.
Anyways.
Yeah. No, that's awesome. No, that's fun. No, I think it's great. When I saw that, that's interesting, because I'm actually looking at the Netflix special on the Tour de France. There, I find it interesting to see all the inner workings of how that works, but. So for you now, you're looking for that next multifamily. You're trying to establish a network of people to facilitate that purchase when that shows up, because it will show up at some point.
Correct.
And anything that anybody listening in can that you want to ask for, or that you're looking for, that may be a missing piece of the puzzle, that I know I'm putting you on the spot, but this is what we do. No, but when it comes to lending, I mean, obviously lending, whether it's the right accountant, right? It's the right lawyer, whether it's what are those missing pieces? Like if somebody came up to you today and, I'm down at Leonard Commercial, I'm coming in and say, hey, Trevor, and I've done this with you already, but, we have this asset come on. Like what is the missing pieces for you to capitalize on an opportunity right now?
Investing in Ottawa real estate? DORE Property Management has 20 plus years of proven results. Call 613-227-0000 or visit dorerentals.com.
Yeah, so I've developed a team. So I've already, been talking with lawyers, accountants, and ultimately to acquire the asset, I would hold it under a corporation. So we've already we haven't set a corporation up yet, but the lawyers are well aware that this would be the process. And so really the missing link, and the link that I am kind of always working on is networking with potential investors. So for me, being in healthcare, I know a lot of people within the healthcare industry. So that's kind of my go-to for potential investors. So I do have some investors that have certainly expressed interest, in the right deal. So it comes down to finding a deal that those investors are going to be, interested in, and presenting that particular deal to that group of investors. So.
And if you have, if you're still, your so-called 9-to-5 job, which is not 9 to 5, the management of the building like that, how would that be handled for you?
So I would outsource the day-to-day.
Sure.
To a property manager.
Yeah.
Lease up would probably be a property manager. And then I know you're owner of a property management company.
Yeah, so I know a good company.
And I have, I have property managers on some other properties that I own, and you still have to manage those people too.
Yeah, in some cases, it depends. Yeah.
Whether
it's people, right? It's depending on the expectation of what you have, but usually with the right parameters, you can pretty much guide the process, but everybody, it's people, right?
Yeah.
We're dealing with people. So
ultimately it would be day to day would be managed by a property manager.
Nice.
And
have you secured any assets in Ottawa yet, or it's still in?
So I don't have anything in Ottawa.
Okay.
I own properties in. I still own my original duplex in Nova Scotia. And I have a 6-unit in New Brunswick.
Sure.
And I have a condo unit downtown Toronto.
Sure. Okay.
So I'm working across 3 provinces. I have a manager for my 6-unit in New Brunswick. And I self-manage Nova Scotia and the Toronto condo.
Sure.
We have a company that leases the unit up at vacancy in Toronto. But aside from that, we manage that ourselves. Me mostly. My wife is the passive investor. So I bounce things off of her and.
Before making the ultimate decision.
Yeah, exactly.
No,
So, for example, because of whether your listeners are aware of the goings on with the condo market in Toronto, because there's such a glut in units available, the sales prices have come down, the rental rates have come down. So we had a tenant will be there a year at the end of this month, and he's reached out to us to ask for a rental decrease.
Right.
Because of units within our same building that rented for less than what he's paying. So my wife and we discussed it, and what we decided to do is they're good tenants. We hardly hear from them, the year that they've been there. What we decided to do is keep them at the same rental rate as they're at, give them a rebate on their first month's rent to put them at a similar rental rate across the year.
Yep.
So what that's doing for us is that next year, if rates have kind of leveled out, and they don't come looking for a decrease, if we are able to give an increase, it will be based on the original rent price.
So it's a temporary credit.
It's a credit.
Yeah, a temporary credit.
Yeah.
You're not changing the price of your lease. You're giving a temporary credit for XYZ reason.
Yeah.
And then you preserve your baseline.
Exactly.
Yeah. No, it makes sense. Yeah. Makes a lot of sense. The and just out of curiosity, like what based on rental rates and what reductions, like what did that look like?
So we ended up giving a $95 a month.
Oh, okay, that's not bad then. On 4,000
credit. Yeah, I wish. I wish.
Yeah. No, fair enough. Okay.
Yeah.
So it's not like 50% off or 20,
Absolutely
30%.
no.
Yeah. Okay.
No.
So it's just slight adjustment.
Yeah, I mean,
Yeah.
So we're at $26.95.
So now you have to work 9 to 6 instead of 9 to 5.
Or 6 to 1.
Oh, okay, whatever. Just add an hour every day, and then you'll cover it off.
Yeah.
So no, that's fair. No, but I mean, you hear those, and it's always if somebody's highly leveraged, obviously, it can be problematic. So it's it's to get some consensus, some ideas of what that looks like. But it's
and for us to, let's say we said no, there's no rent decrease or no concessions. If they decide to leave, then we're on the hook to re-rent it, and we're in a much harder time frame to rent than we were a year ago. So we might not even be able to keep it at what we were, giving them a concession at.
Yep.
Plus the cost of the
Replacing
agent re-renting it, which is a full month's rent.
Yep. And potential vacancy and potential prep of the unit because it needs a cleaning or this or that, a touch-up paint or whatever. So that's I get it.
And
if you can keep the tenancy going with somebody who's paying rent, taking care of the property, by golly, that's usually your go-to if you can.
Yeah, absolutely. And we have a good relationship with the tenant.
Yeah.
And I said to him, just kind of joking around, I said, next year, when the rates have gone up by so much, and that unit that you're comparing to today is now this much, will you send me an email asking for a rent increase? Of course, no. But
really, he's so unreasonable. Is this unit rent controlled or?
Yeah.
Okay. Yeah. So okay.
Yeah.
But preserving the baseline, I think, is a wise move. So no, good for you.
Even if it's a few extra cents.
Yeah. Was that your idea or your wife's idea?
That was my idea.
Oh, okay. Yeah, just trying to give credit to your wife if you could. Yeah. Trying to make you look good. No.
You're good.
No, so that's good. So if anybody listening in has, a multifamily building, obviously Trevor would be interested in having a conversation about potentially acquiring, even if it's a value add, if there's, something to talk about. I think it'd be good. And is there a way to reach you, or just LinkedIn, or what?
LinkedIn. I'm on Facebook, and
we'll put it on we'll put it in the podcast details, so then that way if anybody has listening in
and I've been, I'm not just looking local. I'm analyzing a deal right now in Alberta.
Oh, are you really? Okay.
Yeah. So it obviously requires a lot more work, because you're not familiar with the lay of the land, and all new set of property managers that don't really. I'm having to do a lot of homework of asking around, are you familiar with this company, anybody using them, that kind of thing. So, and because I own properties in Nova Scotia and New Brunswick, I have agents there that I work with. We were just in Nova Scotia for vacation, and we, walked a 12-unit building that I had run the numbers on previously, but the numbers don't quite work.
Okay.
It's,
Okay. No, that's good.
yeah. So basically
Anything
across
else?
the country, but
You're
I mean,
pretty much, yeah.
I mean, pretty much Nova Scotia, New Brunswick, and Ontario. More so when I dealing with Ontario, I'm more local to the Ottawa area. You know, within a radius of that, you know, an hour, even 2 hours. I mean, because I know there's some good properties that investors have bought up in, you know, the valley and stuff, Pembroke Way and things like that. So, yeah.
No, that's good. Anything else we want to cover? I think that's nothing else. We got you prepped for your public speaking.
There we go. First podcast.
Yeah, exactly.
Check.
Got you on. Check. It's done. Wasn't too painful.
No, it was great.
No, that's good. Yeah. Hey, Trevor, thanks for coming on. Thanks for offering to come on. I think we got along right from the get-go, even though you didn't like my pricing, but but no, I think it's good. And I mean, I know we've kept in contact since then, and I'm sure at some point we'll figure out a way to make something happen.
Yeah, sounds great to me.
Perfect. Thanks
for having
again.
me.
Thank you.
Thanks for tuning in to another episode of the DORE Podcast. If you're an entrepreneur or investor focused on real estate in Ottawa, we want to hear from you. Apply to be a guest and check out our video content anytime on YouTube.